Hey, good morning, everybody. I thought what I would do is an educational recap about a post that I had 2 weeks ago that spoke about Apple and what might happen to the stock, as well as the overall market, had they not beat earnings and raised guidance. So let's go back in time, if we will, back to August 1st, and let's take a look at Apple stock. So this is a 12-month chart of the stock where you can see back in August 17th of last year, the stock actually hit a high of 176.15. So what I want to do is I want to go ahead and mark that level if we could. There we go. Perfect. And then what has happened since August of last year? Well, along with all of the other tech stocks, we experienced in 2022 a pretty precipitous sell-off. The stock actually hit a low on January 3rd of this year at a price of 124.17. But since then, it has literally rallied to a new high of 198.23. But let's take a look at its journey along the way. So it comes down, sells off, comes back up. This was a prior resistance level. And you can see on this date, May 19th, it literally hit resistance and came right back down. A couple days later, it tested the resistance again, and then it finally broke through on a green candle. It then closed down the very next day with a red candle showing that it is now checking to see, is this a good support level? And it was. And it starts to move up and then gradually takes off to make a high of 198.23 on July 19th. Now we are looking at the chart as of August 1st. Apple's got an earnings announcement coming up. And the question is it going to beat expectations or will it miss expectations? So let's take a look at what's happened over the past couple quarters. Well, prior quarter, earnings were $1.52. Quarter before that, $1.88. So what we know is we're trending down. What's the likelihood that they're going to beat prior quarter? Knowing that the Federal Reserve has dramatically increased interest rates exponentially to a 20-year high, as well as the stock has moved off the low to a high by almost 60%. I mean, when you think about the fact that Apple is a multi-trillion-dollar market cap company, and it has moved that far, that fast, in literally 8 months, it's pretty much caught every investment manager off guard. Not to mention that if Apple doesn't continue to move higher and it comes down, it will take the whole market with it. Well, why is that? Think about it. Apple is predominantly almost in every single investment fund, mutual fund, 401k, retirement plan. It is one of the most widely held stocks, and that's what's helped the market move up this year. Between Apple, Microsoft, Google, Amazon, any tech stock has really moved the market dramatically, and it hasn't checked back to prior resistance, which again becomes support. So let's say you had a theory that you own some Apple up here at 198.23. You could have bought it at a lower price. Maybe you bought it down here at 124, or you're thinking, you know what? I still want to get in on this trade. So let's do this. So August 1st, let's go buy us some Apple stock. I'm going to buy me 100 shares at 196.37. I'm going to do a market order so we immediately get filled. And I'm going to spend or invest about $19,638. Order was placed. Let's confirm. Yes, we have 100 shares of Apple at 196.38. We have a net position, liquidity position of $19,000 invested, and we're down about 18 bucks. Nothing to be concerned about. But what we think is when Apple announces that they're probably not going to beat what they've done the prior 2 quarters, and it probably could check back to prior resistance, which would now become support. So what I want to do is I want to go out and I want to look at picking up some Apple puts to protect my investment or my portfolio to the downside. And I'm only going to go out to the month of August expiration because I want to be able to capture the current earnings release. So I said I think it's going to go down to about 175. Put contracts are trading at 34 cents a share or $34 a contract, because one contract equals 100 shares. So I'm going to go out and I'm going to spend about 10% of my position size in actually buying the puts, which would be about 70 contracts, give or take. So if you think about that, a contract is going to cost me $34. 10 contracts is going to cost me $340. 70 contracts would cost me about $2,100. So I'm going to hedge my position with an insurance policy of 10% of my portfolio value, believing that it's going to go down anyways. And this should protect not only my position, but give me an exponential return on my put. So I'm going to go ahead and place that actual transaction. Let's take a look, check and make sure that we got filled. And there we go. We did. Okay. So we have 100 shares of Apple. Current value, $19,623. I did buy an insurance premium, some puts, that if it goes down, I would be able to cover any losses. I had my target that was already defined by prior year resistance that would hopefully turn support. And so my insurance policy, or my put contract cost, was $22.75, just over $2,000. So if Apple goes above or stays higher than 175, these puts could become absolutely worthless. Okay. But if Apple's stock price drops toward 175 before they expire on August 18th, these could exponentially increase in value. So what I have here, total invested in the transaction, is about $22,000. So let's go back to the actual stock chart itself, and let's fast forward to this past Friday and see what actually happened with Apple. Okay, looks like Apple's earnings were $1.26 compared to $1.52 compared to $1.88. So it did exactly what I had mentioned. They are having a harder time beating earnings. The stock had dropped from where we bought it at 196.50 down to the support level. It's bounced it, tested it for several days, and now it's given way to it. Okay. So what I want to do is, well, what happened to my stock? It's clearly worth less because I bought it up here. It's now trading here. But remember, we bought that insurance policy. So our Apple stock of 100 shares at 196 are only trading at 172. I've lost $2,349 on that transaction. But my 175 puts that I paid 34 cents for are now worth $2.28 a contract, which is a 572% increase. So my $2,200 insurance policy is now worth $15,000. So not only did I protect myself on the downside, but I profited. And now the total position in 2 weeks is up $10,000. So I wanted to share with you as to how you can use options to protect your portfolio, whether the market is moving up, you could sell upside calls, or down, buy downside puts. Hopefully that gives you a little bit of a perspective as to how you use historical charts. You use support resistance levels. You look at the overall earnings over time, and you pay attention to what's going on in the overall economy. So with that being said, I'm Bill Fanter. Thank you so much for following along. I hope you learned something from this educational review. Continue to follow me, and I promise to simplify the art of options trading. With that, have a great day, and thanks for listening. Take care.